Imagine this. You've got $1,000 sitting in your bank account. Inflation is chewing away at it like a hungry wolf, stocks are swinging like a roller coaster, and every financial expert seems to be screaming something different. Some say buy tech stocks now, others warn a crash is coming. And you restuck asking the one question every smart investor is secretly asking: what is the smartest way to invest just $1,000 in 2025? If you've ever felt paralyzed by the noise in the markets or worried you're making the wrong move with your hard-earned cash, stick around. Today, I'll break down, step by step, exactly how to invest $1,000 in 2025. And by the end, you'll see how even a small amount of money can grow into something powerful if you place it in the right spots. Before we dive in, hit that like button, subscribe, and turn on notifications, because this breakdown might just change the way you invest forever. Let Yes start with the brutal reality. $1,000 in 2025 is not what it used to be. Thanks to years of high inflation, rising rents, and groceries that cost nearly double compared to 5 years ago, money just doesn't stretch as far. Leaving it in your bank account is like leaving ice in the sun. It melts away slowly and silently. And that's why investing it wisely matters now more than ever. But here's the challenge. The world of investing has never been noisier. On one side, Wall Street analysts are pushing tech stocks, AI companies, and the next big semiconductor boom. On the other, old-school investors warn that bubbles are everywhere and that one unexpected move from the Federal Reserve could send markets tumbling. And in the middle, everyday investors like us, who can't afford to gamble. Losing $1,000 might not bankrupt you, but it hurts. And making the right choice? That could be the seed of financial freedom. So, let's cut through the noise. Instead of guessing, we'll break this down into a step-by-step plan, one that balances safety, growth, and opportunity. Because in 2025, you don't need to swing for the fences. You need to build a foundation that compounds over time. Here's how I'd invest $1,000 this year. First, take $200, 20% of your $1,000, and keep it liquid. Whether that's in a high-yield savings account paying 4 to 5%, or even a money market fund, this is your sleep well at night money. Why? Because the fastest way to ruin an investment plan is to panic sell when life throws you an emergency bill. If your car breaks down or your rent goes up, this cash buffer stops you from pulling out of your investments at the worst time. Next, $400 goes straight into a low-cost index fund. Think S&P 500 ETFs like VOO or SPY, or even a total market ETF like VTI. Here's why. Over the last 50 years, the S&P 500 has averaged around 10% annual returns. Yes, there are crashes, dips, and terrifying moments when the media screams it's over, but historically, the market recovers and grows. Now, we take $300 and aim for higher growth. This is where 2025 gets interesting. AI and tech stocks are reshaping the world. Companies driving artificial intelligence, cloud computing, and semiconductors are shaping the next decade. Think names like NVIDIA, AMD, or even diversified ETFs like QQQ. Then there's green energy and EVs. With governments pushing climate policies and EV adoption climbing, companies in solar, batteries, and clean energy ETFs are poised to grow. Healthcare and biotech are another hidden gem. With aging populations and new tech breakthroughs, biotech could quietly be one of the biggest winners. Important note, you don't put all $300 into one stock. Spread it across 2 or 3 sectors. That way, you're riding the innovation wave without betting it all on a single company. Finally, let's put $100 into alternatives. Why? Because diversification protects you when the unexpected happens. For 2025, that could mean Bitcoin or Ethereum, a small exposure to crypto as a hedge against fiat currency and Wall Street manipulation, or gold and commodities ETFs, which are historically safe during inflation or recessions. This isn't about becoming a crypto millionaire overnight. It's about having a hedge in case traditional markets get shaken. Now, let's be honest. The hardest part of investing isn't picking the right stock. It's fighting your own emotions. You'll feel fear when markets dip. You'll feel FOMO when your friend brags about doubling his money on some meme coin. But the real wealth comes not from chasing, but from discipline. Think of investing like planting a tree. You don't dig it up every week to check the roots. You water it, protect it, and let time do the work. And don't forget, there are villains in this story. Inflation is still lurking, silently eating into savings. Wall Street manipulators pump and dump narratives to trap retail investors. And yes, the Federal Reserve, with just one rate decision, can send shockwaves across every market. But here's the truth. If you follow a disciplined plan, you don't have to fear them. You prepare for them. So, how do you invest $1,000 in 2025? 20% safety net, 40% index funds, 30% growth opportunities, 10% alternatives. It's not glamorous, it won't make you a millionaire overnight, but it will put you miles ahead of the average person who either leaves their money in cash or gambles it all on hype. In a world full of uncertainty, this is how you turn $1,000 into the foundation of financial freedom. History shows us something powerful. Every crash, every inflation cycle, every economic storm creates opportunities, but only for those prepared. The question is, will you be ready in 2025? If this step-by-step guide gave you clarity, do me a favor. Smash that like button. Share this with a friend who is sitting on cash and doesn't know what to do. And subscribe for daily insights Wall Street doesn't want you to hear. Because remember, it's not about timing the market, it's about time in the market. And your time starts now.